Susie is going to warm us up with a 2-minute positive intelligence PQ rep. This is designed to kind of open up the right side of the brain, which is where the sage resides, and get us ready to experience business taxes.
And I think it's very appropriate then, when we're about to talk about business taxes, to center ourselves and to maybe shift from the busy work that we've been doing and be present in this event, Tim. And thank you so much for doing this for us and for our clients. And so I'm going to start off because most of us are sitting, and just if you can just have your feet on the floor and be relaxed and have your spine straight. And then we're going to keep our eyes open if we can for this. If you feel the need to close your eyes, that's fine as well. But to start off, we'll keep the eyes open. And just think about what you're seeing. You may be sitting in your office and you might be surprised at how suddenly something stands out at you. So focus in on a picture or a photo and really look at that photo or picture and look at the colors and the shapes that are in that in your room or in your eyesight, and how about the textures of that image and that you're seeing. And then stay with that a moment. And then throughout all of this, I would encourage you to slow your breathing down and breathe in deep and exhale deeply. So continue with that breathing. And then what we're going to do is shift to a more diffused view of whatever it is that you're looking at, and change the focus of your eyes. And again, see how that changes for you. For me, I'm experiencing much more of the color versus the shapes as I'm looking at the picture. And then we're going to turn our primary attention to touch. And so if you're sitting and if you're at your desk, you can put your hands on your lap or on your trousers, or feel the side of your arm, and just softly feel the clothes that you're wearing, and notice perhaps it's rough, perhaps it's soft. And just notice that and really focus in your attention on the sensation of touch. And then move to your fingers. And we call these PQ reps, and they're fundamental to the program and from shifting, as Tim said, and shifting to our sage brain, our calm brain, where we can focus and be so much more productive. And so what we call them are PQ reps, and you can take your hands, one or two, and gently just move the finger back and forth against the thumb and the finger. And you can almost, if you concentrate, feel the ridges. And just do that for a few seconds. And as you're doing that, notice your breath. And take a deep breath in. Count to 3. Hold the breath for 3. Let your breath out for 3. Hold for 3. And return to normal breathing. Feel the rising and the falling of your stomach. And then you can, if your eyes were closed, open them, and back to Tim.
Thank you, Susie. So most of you are not CPAs, so I think preparing to consume this information, I think will help you retain more. Maybe ask better questions at the end, but we're gonna have some time for questions at the end. So with that, I'm gonna share my slideshow. So again, I'm Tim Kenny. I'm a CPA with Kenny and Kenny, and today we're gonna cover understanding your business taxes. So little legal disclaimer, if you're wanting to use any of this content afterwards, just let us know. And this is designed to provide you with accurate information. Your situation may be different, and so keep that in mind, and feel free to reach out to us about any of this content. We're going to have a full recording of this on our website shortly after today. A little bit about us. We're passionate about helping our clients build businesses that work for them and support their fulfilling lives. We have clients at all stages. Worthwhile plans take time to realize, and we work together with our clients to create plans that fit them. Today's agenda, we're going to start with the different types of income. As you'll see in a few minutes, this is what determines what taxes are relevant and what the different rates are. Second, we're going to get into the W-2. This is an often overlooked tax document. Everyone that has a job gets one of these. And then we're going to move on to the business tax returns, look at business expenses and deductions, and dig into the retirement deduction and credits for setting up plans, look at health and benefit deductions, and then finish with record retention and have some time for questions. This is a lot of information to cover, but hopefully you're going to find it relevant to your situation. And again, we'll have time at the end for questions. So with that, let's look at the different types of income. So starting on the left side, this is active income. So think about the income being driven from your efforts versus on the right side, passive income, which is where you're not having to do anything. The investment is doing all the work. So this usually is what you do on a regular basis, and your effort again influences the return versus passive. You don't need to work to earn. Market influences rate of return. Think of brokerage accounts or portfolios. That's what's driving the income on the passive side. So the different types of tax. So on the active side, this income is subject to Social Security and Medicare tax, federal income tax, state income tax. And then when you sell, there's no capital gain. Where we see this is sometimes with a real estate professional. When they're selling, the real estate professional is full-time in that space, and so that they're not getting capital gain treatment. That's considered ordinary income for them. Versus on the passive side, there is no Social Security and Medicare tax on that income. Think about your brokerage account, and you're paying capital gain tax on that, but not paying self-employment tax or Social Security and Medicare tax on that. It is subject to income tax, but the rates are related to the capital gain rates usually, and state is the state. So moving on to the W-2. So as I mentioned, this tax form is often overlooked. We just generally get our W-2s and don't realize how complex this document really is. This is an input screen from our tax software, Lacert. And just to give you an idea of what's involved here, we're looking at Acme Biz and the detail, and you can see that the wages are 125,000, and Social Security wages, the taxable amount is that the wages that are subject to Social Security are 115,000. So that $10,000 difference, I don't have enough detail on this, but it's probably an owner with health insurance premiums that are added. So health insurance premiums are added for taxable income, but then there's an adjustment on the face of the return. That's a lot of information, but they're not subject to Social Security and Medicare tax. And so those are just some of the nuances that come into play when you're looking at your W-2. Now moving on to the business tax return. Just going to start out with who needs to file a 1040. Even if you're below these thresholds and you're not required to file, if you have a business and let's say that it's a sole proprietorship, I would strongly encourage you to file regardless, because the taxable portion is the revenue less the expenses. So your net profit, that's generally what's taxable in a sole proprietorship. And so just to start the statute of limitations going, it's a good idea to file a return. Now, if you're new to owning a business, I would also encourage you to get a separate tax ID number for that business. That way, you're not pushing your Social Security out there to potentially customers or people that you're doing business with that want you to fill out a W-9. You know, in the day and age of identity theft, I don't think you can be too careful. So that's a very low cost way of protecting your identity. Probably one of the most common small business returns is the S corporation or the 1120S K1. And then with larger businesses, sometimes we'll see the C corporation or 1120. In our space, which is businesses that have revenue under 50 million, it's rare that we come across a C corporation. Most that are corporations end up being S corporations because there's favorable taxation on the Form K1, which is where the profit flows through to the owner. In the partnership, that's easier to form in some respects, but you don't have that favorable tax treatment on the K1. So partnership can give some flexibility. So sometimes we'll see that where there's a need to pay partners differently. But again, you know, it takes some planning to determine which entity type, sole proprietorship, C corporation, S corporation, or partnership is ideal for the particular business. And that depends on how much profit that business is making, some of the needs of the owners in the business, all of that drives that decision, as well as limited liability. So ultimately, it's worth taking the time, maybe spending a couple dollars to explore each of those and find the best one, because that is going to determine what you pay in tax. One thing that I want to share is our approach to preparing tax returns. We feel like this is the right approach. A properly prepared tax return gives you peace of mind knowing what is reported to the taxing authorities is proper and supported, knowing that your return was prepared to take advantage of the tax laws that reduce your liability without exposing you to additional risk. So we don't want to miss any deductions or tax savings, but we also want you to be able to sleep at night. And I think that is the right approach. Moving on to business expense, this is critical. I think, and when you think about it, it drives all of the deductions. So business expenses, according to the IRS, should be ordinary and necessary. So let's dig into those two. Ordinary is common and accepted for your industry. Necessary is helpful and appropriate for your trade or business. It doesn't necessarily have to be indispensable to be considered necessary. However, in general, if it leads to current or future profitability, it's probably a good chance that it is a deductible, ordinary, necessary business expense. But it's important to keep this in mind and not just say, well, I'm the owner, I'm going to deduct it because it's convenient for me or it makes my life better. You have to go through the lens of whether it's ordinary and necessary for your business, not you personally. Meals and entertainment. There's always a lot of changes here, so it's important to view what is the current law. I'm just going to highlight a couple of things here. Business meals with clients, so entertaining clients. This is probably one of the most common meals. That's 50% deductible. When you have the team involved, more than 50% of your team is present, those expenses, those meals can be 100%. So events, those are like a Christmas party, those can be 100%. Moving on to office supplies or office expenses. So office supplies and expenses, generally those are items that are used for the business on a regular basis versus office equipment, which has a life of over a year. Now, there's currently a rule in place called the de minimis rule, where in a piece of equipment that's under 2,500 is you're able to expense it under the de minimis rule. And with how cheap or affordable computers have gotten, it's rare that computers are having to be classified as fixed assets and depreciated or expensed under Section 179. So one thing to keep in mind with the de minimis is get a copy of the invoice. Sometimes there's a computer and a monitor, so it's probably under the de minimis rule when you actually look at the invoice. Online purchases, be on the lookout for unpaid sales tax. You're still on the hook for the use tax. Travel related expenses. I'm just going to highlight a few things. And again, we're recording this. If you want a copy of the slides, just email us and we'll get those over to you. But with travel, something to keep in mind is if your trip is more than 50% for business, and if you're going over a weekend, so you have a couple business events on, say, Thursday, Friday, and then you've got one on Monday, the weekend counts as business. So, and lodging wise and meals, only the business portion is deductible. Documentation. So kind of best practice in that space is to have an itinerary. If it's a business trip, you'd want to have some correspondence in the file that you've coordinated with, say, a client beforehand. And then you've got your itinerary to support those expenses, the flight, the hotel, rental car, etc. Just some information, more information on this. And then retirement plan type and funding. There's a lot of different options as far as retirement plans. It's one of those expenses that if you own a business, you're taking the risk. I think it's ideal for you and for your team to have a great retirement plan in place. And so here's a couple examples of different options. So we're going to look at a simple versus a 401k. In our example, we've got gross wages of 40,000. Under the simple, the employer contribution is 3% or 1,200, and then under the profit sharing or SEP, the max contribution is 25% of wages or 10,000. And then the employee has the ability in a 401k to defer 23,000, leaving taxable wages of 17,000, and under the simple can defer 16,000, leaving taxable wages of 24,000. So currently there's some credits to offset the cost of setting up a 401k. So it's never a better time to set one up. And the best approach, if you don't have one in place, is to get a draft of what your 401k and profit sharing plan, look at the costs, look at the credit, and determine if it's a worthwhile expenditure for your business. But I think it's an ideal time to look at that if you don't have one in place for your business. Basically, you're spending a little to save more with the 401k versus the simple options. And for simple options, it's usually a plan that your broker has approved with ERISA. So you're kind of getting an off-the-shelf versus something that's custom to your business and your needs and your team's needs. Fringe benefits. This is another area. One thing that I want to highlight with business owners is in an S corporation, if you're a 2% or more owner, in order for your health insurance to be deductible, it needs to get added to your W-2. So that's the premiums on you and anyone that has constructive ownership, and that would include spouse, kids that are in the business. So it needs to get added to your W-2 in order for it to be deductible to you. So that's something that you want to make sure that you're handling each year. As far as medical goes, if you don't have a health savings account, I'd strongly recommend implementing one. Basically, you're turning your out-of-pocket medical, and in the day and age of high deductibles, it's a huge tax savings to turn those expenses into pre-tax. Now, one way to think about it is, if you say, well, I don't have a lot of medical expenses, that's even better because you're essentially getting a tax deduction so that, currently, and then creating this pool that you can use later on tax-free to pay for your medical expenses. So really no reason not to implement an HSA. Long-term care. Long-term care is valuable. However, I think the pricing, I'm not an insurance person, but in my understanding, the pricing has gotten a little out of reach. In a business, disability insurance is something, especially if you're a key person, that you want to get in place. You also want to look at that for your team as well. If something happens and there's a disability, you want to make sure that there's some income in place to help out. Life insurance, term life makes sense. And if you say, well, I'm healthy, that's the time to actually put that in place. As you grow assets, maybe it's not as critical, but as you're starting out, if you need a bank to finance something, they're going to want to have insurance on your life. So getting those term life policies in place early on can be a blessing to you later on. Oh, one other thing, with disability insurance, we don't want to deduct those premiums because if you do, that is going to turn those into taxable benefits down the road. And essentially you're paying a premium to have that policy in place. So you don't want to erode the value on the back end. A little more about health savings account. Again, you're able to use pre-tax dollars to cover qualified medical expenses. Autos, this is something that comes up a lot with business owners. Just make sure that your record keeping is in place. In general, if it's a business auto, it should be used more than 50% for business. If it's not, then I would advise you not to even go there. If you have a need for business miles and you don't have a business car, you can get reimbursed at the mileage rates, which are high. I believe it's 67 cents a mile, and that adds up quick. But let's say that you do have a business that requires you to be driving for the business on a regular basis, well over 50%. In that case, if you have an auto over 6,000 pounds, you can expense 30,500 in the first year it's placed in service if it's a purchase, not a lease. And again, the 50% rule on percentage of business miles, and then be eligible for 60% bonus depreciation. So when if it is a business vehicle, make sure the title is in the corporation or LLC. This is a IRS alert on taxpayers of companies misrepresenting personal expenses as deductibles. I share this because all of these, deductions like vehicles, travel, meals and entertainment, these are expenses. If you're audited, you can guarantee the IRS is going to spend time here. If they're not legit, then the audit is going to open up to other areas and become very invasive. So I would caution you to make sure that you have gone through that lens of, is it ordinary? Is it necessary? So you can save on the audit end and sleep at night. So finishing up with how long do you need to keep records? These ones we like to advise clients to keep for 7 years. That's well past the statute of limitations. And then in the case of audit and legal reports, income tax returns, major contracts, these are documents that you'd want to keep forever. So, I know we're close to time, but just want to open it up now for questions and discussion. Give you guys a few minutes to get off mute and ask questions.
Tim, thank you so much. That was amazing. While everyone's waiting, if they have questions. The one question I had was, what if you've got 3 businesses and they're all different? How do you allocate? How would you handle that situation?
In what respect?
Well, as regards if they're the expenses, if they're, how would you determine, would you just add up all your expenses and then allocate across all 3, or would you say, okay, this expense is relevant to that business, and you
Okay,
understand? Yeah.
I see.
Yeah.
Yeah. So again, let's go back to that litmus test of deductibility. So is the expense ordinary and necessary for this business? No? Then move on. Next one. And so on. Let's say that it's ordinary and necessary for a couple of them.
Right.
Well, which one is it benefiting?
Okay.
Remember that best practice, is it leading to current profit or future profit? That's how I would approach it.
Great. Thank you.
You're welcome.
Tim, question. With everything you covered today, like if you had to say what are a couple main pitfalls of business owners, whether it's in the expense area, taxation area, just things that you see people stumble on in these areas that you would say, hey, these are things that I see all the time across our client base, things that you should be on the lookout for and guard against.
Great question. So I would say the business auto. That one snags a lot. Because I've yet to meet a business owner that doesn't think that they deserve a business car. Now, whether they need those vehicles more than 50% of the time for the business, and whether it's ordinary and necessary for the business, that's another story. Now, it snags them because it's a high audit probability that it'll get looked at under audit. Secondly, if they don't have the business miles, we're having to add income for the personal use to their W-2. And in the next breath, they say, well, how much is my business worth? Well, you've got this large business expense. And so there's, not as much profit after deducting it. So you're paying on the back end as far as the business value. So that's one of the expenses that can really snag a business owner. And it's hard because a lot are getting business advice from random people they meet on the streets or on the golf course or wherever.
Morning, Tim. Thought I'd ask
Morning.
you a quick
Morning, Dad.
question.
It's gonna
Yeah.
cost you. I'm charging you. No, I'm
Why
just kidding.
would- Why would things change?
Well
Okay,
done.
all right, now we'll get serious, okay?
Okay, all right.
All right. Yeah, that's true about getting advice. I always remember how many times in the taxis I would get advice and I would ask the client, well, where'd you get that advice? And they'd say, oh, the mailman. So anyways, is it a good idea to like of a system to keep track? Because it is a problem, I know, for businessmen and women to keep track of their mileage and their expenses. And I always think of the day timer system, the pocket day timer system, which was a good system that had a format of keeping track of expenses on a daily basis. And then also at the back of it, it had it for the week or the month, depending on what system you used. Would you suggest any particular systems that could be helpful for a business person to utilize? So it's
I
not
mean,
such a federal case in gathering the information.
as far as hard copy system, I think Daytimer is a great one. And that works. Now, there's a lot of applications out there, Mile IQ, that clients have deployed successfully. You know, at the end of the day, some clients will put a spreadsheet together. You know, there's a lot to track though. I mean, as it comes to the documenting a business mile, you need the starting place, the ending place, a trip from your home to the business. That's a personal mile. Those are personal miles. So there's a lot to kind of sift through. So that's the other reason, you know, people get snagged on that deduction is I've yet to meet anyone that loves tracking their miles.
Thank you.
Good question.
I have one final question.
Okay.
If people want to get in contact with you, or the easiest way, I'm not going to say like a free consultation, but there's questions from this webinar that they wanted to follow up and just ask a few questions, just see how we might be able to best help. What's the easiest way to kind of get in contact?
You can go to our website and there's a way to book a complimentary 15-minute discovery session. You can always email info@kennycpa.com as well. And those are probably two great ways to do it. We got an awesome office manager, Liz Benson. So if you call our office, Liz will direct you and get you on the schedule.
Awesome. Thank you.
Thanks, Richard.
Thanks, Tim.
You're welcome, Susie. Anyone else? Any questions? All right. Well, thanks everyone. Appreciate you showing up.